What's up, crypto explorers, and welcome back to Bitcoin Bulletin. Get ready for a rapid-fire rundown of the news that's shaking up the digital asset world. First up, we're diving deep into the world of decentralized finance with Alexei Zamyatin, the co-founder of Bob. He's forging a new path, fusing Bitcoin's robust security with Ethereum's programmability to put BTC at the very heart of DeFi. We're talking about unlocking a staggering $750 billion in latent capital and making Bitcoin DeFi not just possible, but absolutely massive. Next, we're jetting off to El Salvador, where Stacy Herbert and the National Bitcoin Office are making waves. By the end of 2025, this nation plans to launch its very own Bitcoin banks, a move that could redefine digital finance and offer innovative crypto services backed by solid regulatory support. Could this be the blueprint for other countries looking to embrace the future of finance? But it's not all sunshine and rainbows. We've got Peter Schiff, the ever-vocal critic, taunting Bitcoiners on social media. He's claiming that both risk-tolerant and risk-averse investors have cashed out of Bitcoin, especially as it lags behind new record highs set by stocks and gold. Is Schiff right, or is this just another classic case of Schiff talking his book? And finally, turning to the institutional side, we have Wall Street expert Jordi Visser predicting a seismic shift. He forecasts a sharp rise in Bitcoin investments by U.S. financial institutions before the end of 2025, fueled by ETF inflows and growing corporate adoption. Is this the catalyst that will send Bitcoin to new all-time highs? Stick around to find out all the details. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. Bob is making Bitcoin DeFi massive. Alexei Zamyatin, co-founder of Bob, is spearheading a revolution to finally put Bitcoin at the epicenter of decentralized finance. For too long, Bitcoin's dominance in value has been starkly contrasted by its minuscule presence in DeFi, holding a mere 0.3% of total value locked compared to Ethereum's commanding 30%. Bob aims to shatter this imbalance by acting as a secure, hybrid, multi-chain gateway designed to tap into the colossal $750 billion in capital currently locked out of Bitcoin-native DeFi. Imagine seamless access to yields and liquidity across various blockchains, all while upholding Bitcoin's core ethos and integrating Ethereum-style programmability. That's the ambitious vision of Bob. To tackle the historical hurdles of trust and fragmentation that have plagued Bitcoin's DeFi potential, Bob introduces two groundbreaking innovations. First, it enables native BTC DeFi powered by Bitcoin's staking finality and the innovative BitVM bridge. This means BTC on Bob is truly BTC, free from the shackles of wrapping or custodial services. Second, a revolutionary Bitcoin intent system, coupled with hybrid vaults, empowers users to effortlessly swap between native BTC, wrapped BTC, and various DeFi positions, or even deploy BTC into strategic yield-bearing vaults, all within a single, streamlined transaction. These advancements unify user experience and security, paving the way for any EVM-compatible chain to integrate Bob and unlock a new era of trustless, composable Bitcoin DeFi. The crypto community is buzzing with anticipation, with many seeing Bob as the key to unlocking Bitcoin's vast untapped potential in the DeFi space. Analysts are closely watching how these innovations will impact Bitcoin's total value locked and its position in the broader DeFi ecosystem. Don't go anywhere, because what's next could redefine national finance. Next up, we're heading to El Salvador for a massive announcement on Bitcoin banks. El Salvador is launching Bitcoin banks. El Salvador is once again pushing the boundaries of digital finance, with officials announcing that Bitcoin banks are set to launch by the end of 2025. This bold move, revealed on the 4th anniversary of the nation's groundbreaking Bitcoin law, signals a significant transformation of its financial system, bolstered by the recent approval of the investment banking law in August. Stacy Herbert, head of El Salvador's National Bitcoin Office, ONBTC, made the exciting declaration during the inauguration of the new Bitcoin zone at the National Library. She highlighted that these Bitcoin banks are designed to address long-standing frustrations citizens have faced with the traditional banking system. The newly established investment banking law creates a unique regulatory framework for these institutions. Crucially, they will not fall under the purview of the traditional superintendency of the financial system. Instead, oversight will be provided by the newly formed Commission of Digital Assets, CNAD, fostering an environment ripe for innovation in digital asset services. These Bitcoin banks are specifically targeting high-net-worth individuals and crypto businesses, requiring a minimum capital of $50 million. Clients must demonstrate liquid assets of at least $250,000, signaling that these institutions are geared towards sophisticated investors and fintech startups rather than the general public. Services will be deeply integrated with digital assets, including accepting deposits in Bitcoin or tokenized US dollars, offering loans secured by crypto holdings, and providing secure digital custody. Wallet management, token issuance, and investment services will also be core offerings. To operate legally, these banks must obtain a Digital Asset Service Provider (DASP) license. Juan Carlos Reyes, president of the CNAD, expressed confidence that this framework will attract significant foreign investment, positioning El Salvador as a leading regional hub for digital finance. This ambition is further supported by the country's substantial Bitcoin reserves, now exceeding 6,300 BTC, valued at over $700 million. Despite concerns raised by the International Monetary Fund regarding crypto volatility, and a past agreement to restrict Bitcoin purchases in exchange for a loan, President Nayib Bukele remains steadfast in his Bitcoin strategy. With nearly 70% of the population still unbanked, these Bitcoin banks could offer a new pathway to financial inclusion. This initiative complements existing crypto projects like the geothermal-powered Bitcoin mining program and the Chivo wallet, underscoring El Salvador's commitment to long-term digital innovation. But not everyone is celebrating Bitcoin's rise, and one prominent critic is speaking out. Get ready for Peter Schiff's latest take on why Bitcoin investors might be selling. Schiff claims investors are selling Bitcoin. Peter Schiff, the co-founder of Echelon Wealth Partners and a notoriously vocal Bitcoin critic, has taken to social media platform X to declare that both risk-tolerant and risk-averse investors are reportedly selling their Bitcoin holdings. Schiff, known for his staunch advocacy of gold, seemed to relish the opportunity to taunt Bitcoin proponents, asking his followers with a clear sense of schadenfreude, "Does this worry Bitcoiners?" Schiff's claims come at an interesting time. While both traditional stocks and Bitcoin have recently touched new record highs, Schiff points out a divergence. The Nasdaq Composite, for instance, hit an all-time peak ahead of a highly anticipated Federal Reserve rate cut. However, Bitcoin, uncharacteristically, has failed to rally in tandem with the stock market. In fact, the correlation between Bitcoin and the Nasdaq has recently dipped to its lowest point since September 2024. Meanwhile, gold has also been on a tear, surging past the $3,600 level for the first time amid global economic uncertainty, a development Schiff frequently highlights. In contrast to gold and stocks reaching new heights, Bitcoin is noted by Schiff to be down approximately 6.2% from its own record high of $124,128, which was set back on August 14th. Schiff argues that this underperformance is a clear signal for Bitcoin investors to change horses and look towards assets like gold. He also weighed in on macroeconomic policy, expressing conviction that the Federal Reserve is poised to make a major policy mistake by cutting interest rates into an environment of rising inflation. Schiff believes the Fed should instead be considering another rate hike, asserting that monetary policy has been too loose. Schiff's pronouncements are met with mixed reactions from the crypto community. While some may heed his warnings, many Bitcoin supporters dismiss his commentary as predictable and self-serving, often pointing to his consistent bearish outlook on Bitcoin regardless of market conditions. The debate continues on whether Bitcoin's recent price action is a temporary decoupling from traditional markets or a sign of deeper underlying issues. While some see selling, others see a massive buying opportunity. Next, a Wall Street expert predicts a surge in institutional Bitcoin investments. Wall Street expert sees institutions pouring into Bitcoin. Jordi Visser, president and chief investment officer at Weiss Multi-Strategy Advisors, is forecasting a significant surge in Bitcoin investments by U.S. financial institutions before the close of 2025. Visser believes this influx will strategically position financial portfolios for even greater Bitcoin exposure in 2026, a prediction made while Bitcoin hovers near the $115,000 mark, reflecting strong current market performance. In a recent interview with investor Anthony Pompliano, Visser stated with certainty that allocations to Bitcoin within traditional finance are set to increase substantially between now and year-end, pinpointing the fourth quarter of 2025 as a critical period for this growth. This forecast arrives amidst ongoing market discussions about whether Bitcoin has already reached its peak or if further significant gains are on the horizon. Supporting Visser's optimistic outlook are the robust inflows into U.S. spot Bitcoin ETFs, which have garnered over $2.3 billion in net inflows within just 5 days and nearly $57 billion since their launch in January 2024. Concurrently, corporations now hold approximately $117 billion worth of Bitcoin on their balance sheets, indicating a growing acceptance of Bitcoin as a serious asset. Furthermore, a January 2025 survey by Coinbase and EY Parthenon revealed that 83% of 352 global investors plan to increase their crypto investments this year, with 59% intending to allocate over 5% of their portfolios to digital assets. Visser also highlighted technical indicators, such as mini breakouts in crypto charts, as further evidence of potential price increases. While acknowledging risks like Bitcoin's inherent volatility and the potential impact of economic shifts such as rising interest rates, Visser remains confident. Analysts project up to $120 billion in Bitcoin inflows for 2025 and a staggering $300 billion by 2026, underscoring a strong consensus for continued institutional adoption. That's all the news for today, but we're not done yet. Stick around for a lightning round recap of all the biggest stories and our full call to action. And that's a wrap on today's Bitcoin Bulletin. We saw Alexei Zamyatin and Bob paving the way for massive Bitcoin DeFi, El Salvador announcing Bitcoin banks by the end of 2025 thanks to Stacy Herbert, Peter Schiff stirring the pot by claiming investors are selling, and Wall Street expert Jordi Visser predicting a huge surge in institutional Bitcoin investments. If you found this update valuable, please smash that like button, subscribe to Bitcoin Bulletin for more breaking news, and hit the notification bell so you never miss a beat. Also, follow us on all our social media channels and drop a comment below telling us what you think about these stories. We'll see you in the next one.